Hey, good day, everybody. Jeffrey Beamer here, Senior Investment Strategist over at ewotrader.com. Coming to you on a Tuesday. Here, it's May 14th. We're just practicing for the day after Memorial Day that's coming up in 2 weeks. So we're going to take a look at the markets today. We're going to start by looking at our trade that we did last week, the Delta Neutral Pass trade that we have. We're going to talk about some headlines, market movement headlines today, do a quick little U.S. market update, take a look ahead at what's on our calendar this week, and then we have another trade for you towards the end. So let's get right to it and dive into last week's trade. You know, we have had a string of winners on this show, and we have our first loss in over a month, maybe closer to two, on ARM Holdings. And this stock just did not move. You can see the last earnings event. This stock really popped. Now, this company used the words AI on that last earnings announcement, and you can see the reaction. I thought we might get a little follow through this time. So we put this as our trade, and you'll see here the loss was just a little over $500. Now, keep in mind what our past winners have been. We had Carvana, which was about a $2,400 gain. We had Tesla, which was about a $1,200 gain. We had Discovery Financial, which was just a couple $100. All right. So these, winner, winner, winner. And then when you have a loser, and as long as your losers are much less than your winners, that turns you into a pro trader. That's how this works. All right. Keep your losses small, let your winners take over. And that's how you build your account. All right, so moving on, that's all well and good. What's in the past, we're looking for our next opportunity. So let's jump into headlines. Let's see what's going on out there. Interesting. New York Fed came out with a survey saying inflation outlook rises. All right, fueled by increasing for housing costs. I thought that was pretty interesting that they're really seeing that hey, things are getting tough out there. Now, my opinion has been for a while, and if you're one of our subscribers and you listen to our insiders group on Thursday nights, I have been talking almost all year that when the Fed paused at these current levels, that the risk was actually for continued rate hikes, not rate cuts. And slowly, everybody, including the big investment houses, have been paring back their number of rate cuts. They're anticipating Goldman's walked it back from 6 rate cuts down to maybe 2, I think they're at now. Okay. I said maybe 1 in June. I've taken that off the table. I think it will be later this year, if any, but the risk is to the upside. Then we have a busy week for economic data, and it started today with producer price index, and then the CPI, along with year-over-year inflation data, is tomorrow. But let's zero in on that hot read that we got from the PPI today. There's a little trading lingo for you. The hot read was the PPI rose 0.5% in April. That was much more than expected. That means wholesale prices that manufacturers are buying are getting more expensive. And guess where they pass those costs along to? That's right, the consumer. All right, so we're going to keep an eye on that, and the Fed is definitely watching that. And then we have upcoming earnings. Earnings begin to slow this week. We have between 700 and 900 earnings announcements, and then it really drops off next week. Doesn't mean the opportunities necessarily go away, because we're very picky about the stocks that we do choose to trade around earnings, but just it's now not as frantic of a pace that we've had for the past few weeks. All right, so we got some names coming up. We'll take a look at those in just a moment. Let's jump over to the charts. Let's take a look at Spider Index Trust, SPY. You can see that we broke out of that rectangle, and with some authority, we're risen up here to resistance just above the 520 level. Again, that's on SPY. Okay, and you can see that big long run. We would really like to see this maybe consolidate here and then break out, but it is at some technical resistance. Let me bring up my Heiken Ishii candles, because I do like tracking those. The only thing that I get concerned about here on this chart is that these green bars, and anytime you've got these big green bars with no wick on the bottom, that is a strong uptrend, okay? Same thing with the red bars on the downtrend, but we're looking at the most recent data. And what concerns me here are the bars are getting smaller. All right. Now, if we start getting a little wicky, and what I mean by wiki is if you look back here at this little area back here, you can see big wicks on the tops and bottoms of the candles. If we start getting a little wicky, that would be a good area to maybe look for a downside move. But right now, I think we might be waiting for some continued guidance from the Fed along with the remaining earnings. We could break through this. And if we do break through this level, where are we going? Well, we're definitely going up to the 530 level. Let me bring up my candles once again. All right. We're definitely going up to the 530 level, and possibly a little higher, but we'll see. We need to get through this 520 level first before we do anything. Jumping over to the Qs, they look just like Spider. Okay, we're back up here into this channel. All right, and we're in this thick area of resistance. All this price action here that was forming between 435 on the low end and roughly 450 on the high end. That is where we are kind of stuck right now. Now, this trend is a little bit more defined. Let's pull up the Heikin candles here. And the same thing kind of goes along with it here. You got these smaller candles, and that is a little concerning. So we'll look for that wiki action that I've been talking about. And if we don't get that, we get continued green candles, then the market's going to move higher. Got 450 as my next target on this. If this trend continues, it will be somewhere between 445 and 450, but we'll keep an eye on it. Moving on to IWM, the small caps. I left my hike in the sheet candles on. Look at this. Now this is a big defined bullish trend right here. We are moving higher here, and really you can attribute this to rates. Let me pull up my regular candles again. Okay, don't let the red ones fool you. Obviously, that's why I do hike in a she, because how the candles color themselves, even though you might have had let me use this as an example. On Friday, you had a higher close, all right, so that on the day, but from the open, it was a lower close from the open that day. That's why that candle is red, okay? And so those sometimes can be deceiving. You need to kind of keep an eye on that. But that's why I like using my hike in a she, because then that weeds those out. All right. Now we currently have a big, strong green candle here, and we'll just keep an eye on this. But that 210 level is now definitely in play, as if interest rates continue to moderate and soften, that's good for small caps. Okay. And we could see this continue to rise. All right, moving on, let's take a look at oil here real quick, and we use our proxy USO for that. And interestingly enough, we're beginning to form a channel here between 75 and 76 half. You could call it 77, this $2 range on crude oil right now. And just a little while ago, this candle came off its lows. It was looking really weak there for a little while. And again, pull up my hike in a she. Let's take a look. And you can see the wiki that we have on these candles here would indicate possibly a reversal. And that's what I was looking at over the past few days. But we'll see where today's candle ends up. And we could see maybe a continued sell-off on weakness in the crude oil sector. All right. So interesting day. We haven't broken down yet, but any break below that 50% retracement, in fact, maybe we could put on some additional studies here, putting on my moving averages. And all right, so the blue moving average here is my 10 period. And that's what is the short-term moving average is really kind of controlling that price. My red is a 21 period moving average, and my gold here is my long-term, which is the 161 period. And so we're just really starting to converge between that very short-term and that very long-term, and that could generate a breakout to one side or the other. All right, but this is consolidating here at these current levels. Let's move on to the metals. Um, I was on the right side of this for a little while, and now I'm on the wrong side of this. I thought we'd get a little deeper retracement on gold, and it has popped up, and now it's really trading in no man's land. Okay, it needs to kind of make a decision again, forming this channel, a channel between 212 half and the recent highs of 222, so a $10 range. It's stuck in a $10 range for gold, and we would like to see it break out. There's all sorts of news coming out in this sector about who's buying and who's, well, not very many sellers right now, but who all is buying, and of course, it's the normal, usual suspects: sovereign nations and big companies buying gold. So silver's kind of the same way here. We got a nice day for both gold and silver. They're in the green today. Silver is on a percentage basis, silver is trailing gold today. That's not usually the case. Usually silver dominates on a percentage basis, but we're just rising up and retesting that previous high. We just can't seem to beat it. And the angle of ascent, notice how we, off this pivot low here, we gapped up, consolidated, gapped up again. This is relatively steep in my book, and again, that is something that the technicians kind of look at. I'd like more of a 45 degree on these rallies or sell-offs, and when you get this kind of vertical move, that is classic V bottom, but usually not sustainable. Okay, usually you'll get this maybe sell-off. It'll kind of come down, probably retest this area around 25, and again, now you're stuck in a range. Okay, so and again, that's not really a V bottom. That's a V bottom of a higher low. Okay, as we're well off the lows that you can see in this chart. Okay, so moving on then to interest rates. Let's look at the long end of the curve first. This is TLT. This is the iShares 20-year Treasury bond ETF. It's my proxy for the long end of the curve, and you can see that we're just holding. We rallied up off these lows and began to consolidate. And it really, I thought we were going to get a little deeper dive on TLT, meaning interest rates continue to creep up, but they really have moderated, and they continue to do so. We're up a little bit on TLT today. Again, that's why looking at IWM, and if we look at short-term rates, which is SHY, that's the iShares 1 to 3 year Treasury bond ETF. You can see a little higher move here, about 0.6 of a basis point. And again, that's being reflected in pricing. Now, what's interesting here is what that is doing for the inverted yield curve. So there's some good news, bad news here. Good news, we're getting an ease in interest rates. Bad news is that inverted yield curve, as I predicted. Now, excuse my squiggly lines. That's me drawing with a mouse. Okay, but anytime we got this is that line that I was talking about, that kind of roughly 45 degree angle. We had it going good there for a while, and then all of a sudden we accelerated that pace, and that's a never sustainable. We broke down, and we're trading right now around 97 to 99 basis points inverted. Okay. And so, yes, interest rates are easing, but it's doing nothing for that inverted yield curve. We could possibly see this continue to widen and steepen as time goes on, breaking down maybe to one of these two pivot lows here. But right now, I don't see anything that's saying we're working ourselves back to the normalcy of backwardation. Okay. And this fight between contango and backwardation continues, and we're just right now, short-term rates are winning. All right. So if we look at mortgages, again, there's good news there. Mortgage rates are dropping. The blue line represents the mortgage news daily average. Okay, and you can see it's coming down to about 7.16%. That's well off the highs, around 7.7 excuse me, 7.5. Okay. Every little bit helps when it comes to mortgages. And interesting that the Freddie Mac, again, that's a weekly survey for the silver and or gray, and then the gold. Those are weekly surveys, and notice the sharp turn on Freddie Mac as a weekly survey. That's pretty interesting there, as it follows the Mortgage News Daily number. So interest rates overall are down, and we're seeing really strength in the housing sector from a couple of things. We're seeing it from these interest rates moderating, staying around that 7 to 7.5, and then home builders buying down, offering to buy down rates for their buyers, and that's stimulating some continued growth. There are dark clouds on the horizon. I'm not ready to comment on this yet. I need a little bit more research on it, but there are some dark clouds on the horizon for housing and interest rates, and I will share that in an upcoming show in a few weeks. I just need a little bit more information before I start talking about that. Definitely don't want to put anything out there that's not accurate and reflective of current market events. So let's get into, speaking of current events, let's get into earnings. Okay, one of my favorite little hobbies here is trading around earnings. And today on Tuesday, again, the names are familiar. They're just not the big names that we're used to. Okay, we do have Sony was this morning. You got companies like Boot Barn and others after the market closed today. But really, it's Thursday when you got some additional names that you're familiar with. We have John Deere, and then you have Applied Materials, and Under Armour. Okay, so some decent names. Oh, Walmart. Okay, on Thursday morning. Okay, that's probably the key one as far as the big name this week. That retailer, that'll definitely be one to watch on Thursday. Thursday will be the day to watch for earnings this week, and then we round out with just a couple on Friday. So that brings us to the trade of the week. This list that is generated off of unusual option activity and the market cap of the companies, and so that's why it's more familiar names to you. Sometimes we work with not so familiar names, and that takes us into a name that wasn't familiar for a long time, and then it got some notoriety, and that is going to be our trade of the week. This is going to be on Palo Alto Networks. Okay, PANW. That is our trade of the week. We are looking at earnings. Earnings don't come out until next Monday. Okay, so we will be talking about this on Monday, and I believe the earnings are after market close. But the thing is that we could have a potential to take this trade off early with a significant profit. So I wanted to go ahead and show that today. Okay, and we can make a decision on Monday whether we're going to take it off with some profit. That's the only reason we would probably take off this trade, or we're going to keep it through the Monday earnings cycle. All right, so this is a strangle. You'll notice the flat on the risk curve here, the flat bottom, which means I'm using two different strikes, a certain strike with the call, a certain strike with the put, and I am using the same expiration date. Okay, now this Palo Alto is it's up here around $300. Okay, so it's going to be a more expensive trade. You're looking around $2,500 to $3,000 for a straddle or a strangle. Higher for the straddle, a little lower for the strangle. That's why I chose the strangle. But the stock has been a mover, and you can see by the last earnings announcement, that big gap down, that this thing can move. So, everybody, that's it for this week. Everyone have a great trading week, but join us next Monday as we make a decision about this trade and decide whether we're going to keep it or we're going to take it off with some profits. So with that said, everyone, once again, have a great week. We'll talk to you again next week. Take care.